The tit-for-tat tariff war between the U.S. and China has potential to reach catastrophic outcomes for the United States. The Chinese have a not-so-secret weapon at its disposal. Manila Chen has been following the story and brings us all of the details. Manila.
Hey there, Scotty. So it'll come as no surprise, I think, to anybody that China owns a huge chunk of America's debt that comes in the form of treasury bonds, and that is where the not-so-secret weapon lies. Now, Beijing, however, right now looking to cut its tariffs on imports from some of their other major trading partners starting as early as October. Early reports which have not indicated which exact countries might enjoy the lowered Chinese tariffs just yet, but some speculate automakers like Mercedes based in Germany and other high-end goods from Europe might see import tariffs lowered. So that's one little slap Beijing is teeing up, but also that China owns something like $1.7 trillion in U.S. Treasury bonds. Ask any financial expert and they'll tell you, U.S. bonds are the safest investment anybody can buy. And just like a private investor or individual, China bought a ton of bonds and has accrued a ton of interest on those U.S. bonds. This is where the danger sets in. If this trade spat continues, China can fire back in a more significant way than just counter tariffs. They can sell off the bonds they own, and they own more than 25% of U.S. debt. Take a look here. They are the biggest owner of U.S. bonds by a mile. And if they did that, this could rattle not only domestic markets by flooding it with treasuries, which could cause fixed income prices to fall, yields would then rise. So in plain language, it could make it more expensive for U.S. companies and individuals to borrow, which leads to an overall economic slowdown. And perhaps worse yet, if China dumped its holdings, it could trigger other bondholders to panic and sell theirs as well. So today, the Ministry Commerce spokesman Gao Feng said this at a press conference.
All of the countermeasures China has taken are enforced. China had to do it only to defend our own legal rights and interests, as well as the global free trade order. It has nothing to do with the domestic politics of the U.S.
All the other countermeasures, he says, which truly have been quite tame when you think about all the various ways China could strike back. For example, if they really wanted to, the Chinese could devalue its own currency. Devaluing the yuan would make exports even more attractive and actually aid to increase the trade deficit that President Trump has been railing against. Beijing, however, right now, looking to cut the tariffs on the imports as early as October. So, Scotty, China finding ways around these U.S. tariffs to keep expanding their economy and their marketplace. So we might find this tit-for-tat trade spat to be an exercise in futility, really, because at the end of the day, the U.S. and China, we all still need each other, because if China dumped our bonds, they'd have to sell it at a loss, so they won't get dollar for dollar. So there you got it. You know, it's a little silver lining, I guess, at the end of this trade battle, Scotty.
Little silver lining.